So now let's talk more about liabilities. So all liabilities is just debts payable to outsiders. So debts are just another way of saying liabilities. So liabilities represent the amount of the assets that others, like the bank, own. Companies that are owed money are called creditors. So this is an important vocabulary term to understand. Creditors are someone that the company owes money to. And these creditors, they have a claim to the assets. For example, if you have a mortgage, which is just a house loan, if you don't pay your mortgage, they'll kick you out of the house. So the bank will get to keep your house because they have a claim to that asset. So some common types of liabilities are accounts payable, and this is a really important term. We'll learn about that on the next slide. And we will be using accounts payable a lot in this class, so it's an important vocabulary term to understand. So accounts payable are just a type of liability, and as we'll see on the next slide, they are usually unwritten. Notes payable, which we will learn more about in Chapter 8, are usually written, and they're due usually sometimes past 30 days into the future. And because they're due past 30 days in the future, they usually have interest. So accounts payable, there is usually no interest. Notes payable, because it's a longer term, you usually do have to pay interest. And another common type of liabilities are just the plain old loan. So let's talk about the most common type of liability, accounts payable. So these are debts the company owes to someone, and that someone is called a creditor, usually due to be paid within 30 days. And these are usually unwritten, as we'll see on the next slide. Now, in accounting, we use lots of abbreviations. So instead of saying accounts payable, we will usually call it AP. So if you see AP, just realize that's accounts payable. So we're going to show you 3 examples of accounts payable. One's a personal example and 2 are business examples. Let's first start with a personal example of accounts payable. So let's say you visit your doctor, and then later you receive a bill for $100 in the mail. Once you get the bill, you now have $100 of accounts payable because you owe the doctor $100. Once you pay the bill, you will no longer have $100 of accounts payable. Now let's do an example of accounts payable for business. So your business is to build houses. So you call Home Depot and request that they send lumber to your work site. Instead of you paying cash immediately, they allow you to put it on your account and send you the lumber. You have not signed any documents, therefore this is unwritten. And a company will let you do this when you have a good credit record with them. So you now have accounts payable owed to Home Depot, and you must pay within 30 days. Let's talk about another example of accounts payable for a business. Again, you buy lumber from Home Depot, but this time you use a credit card. You now have accounts payable owed to, this time it's the credit card company that you owe the money to, not Home Depot, and you must pay it within 30 days. So those are examples of accounts payable in your personal life and in the business world.